Good afternoon. Gabe Velazquez here with you, transfertrain.solutions.com on a Friday. This is the 20th December. Market's bouncing back, obviously, today. Let's get right into the charts and see what's happening. We had some Fed speaker this afternoon or earlier this morning talk about that they're going to, the rates are coming down, whatever. Again, algorithmic trading, thin volume. You got some short covering, possibly the fact that we couldn't continue the downside. So in ultimately what we're doing, and take note that we are fading. I'm doing this right before the close here. We are fading back into the close. You can see the we peaked at 60.50 on the S&P futures, and we're starting to kind of fade here. So ultimately, I think it's still. I don't think the volatility is over with. You can see the Nasdaq also fading pretty hard into the close. It's just going to be a very choppy, thin volume coming into next week. Again, under the surface, a lot of the stocks that got hit are recovering somewhat. But I don't think anything's changed with regards to the volatility increasing and then possibly, again, higher rates still putting a damper on things. The good news is, again, the volatility can create some more opportunities. So overall, again, just taking the lens back, you can see we still have some big supply of those left from the big sell-off, and relative to where we were, just this Monday this week, we are still way down from that. And now again, the next step is whether we retrace all the way back up to there. I suspect I don't think this actually cooled off any of the froth that was in the markets that I've been talking about. With even the put call ratios today were still, pretty elevated, which means that the buy the dip crowd still hasn't been crushed yet. And I think until we have that, we probably get at least a sustainable bounce that will last more than a day like today. So we'll see. Everything else really, rates did also come off a little bit, but they're starting to edge higher. The dollar also coming off of the resistance level there. And notable again was Bitcoin. Looked like, again, they along with everything else did catch a bounce, but it's kind of precariously sitting at 92K. You can see, and created some nice supply zones on the way down. Also, I think the standout was nat gas. I've been talking about this ad nauseum. Did pull back. We do have gap risk over the weekend, so it's again, could gap up or down. It's starting to look real bullish to me, but I am not going to be convinced until if you look at the forward contract here that's going to be rolling over next week, we still have 350. Remember, this is basis the February contract, so we'll see if that actually breaks out, and that would take the UNG breaking out about 1560. Also, grains are starting, particularly soybeans caught my eye this week. They're getting some nice movement. If they can break above 10 a bushel, I think we got a nice run up in the soybeans coming up next year. So keep an eye on that. And then obviously all the stocks, most of the stocks just kind of meandering, kind of sitting where they were, like NVIDIA just chopping around here between, 127, 130. Apple they ran that thing up. Couldn't break 245, and they ran it up to the old high. So maybe it's in a range right now between 245, 255, 254, which is the all-time high, and so on and so forth. So going to be tricky next week. Light volume. We got shortened trading day on Wednesday, Christmas Eve, and then no trading on Wednesday. So it's literally going to be like 3.5 days of trading with thin volume. So I'm not sure what to make of any of that, if that's any kind of, and then you got maybe some seasonals coming in as well. So we'll see what happens there. All right. I will do let's see, Tuesday is Yeah, I'll do a early version of this on Christmas Eve around, because the market's closing early, so right after that. And then we'll go from there, okay? Not have a happy holiday. Take care.